My name is Greg Dybas, team lead with the Dybas Group at EXP Realty, here with one of our preferred lenders, Jerry Dupas, with Guaranteed Rate. And we're going to be asking him some questions today as far as loans and financing to purchase a house, things you need to know. So Jerry, one of the questions I got for you right now that a lot of my clients are, usually struggling with is why should you get pre-approved right out the gate?
Well, to be honest, everyone really should kind of come to us first, to get those numbers figured out. You don't want to be looking at a house that you walk into and it's beautiful and everything's perfect for you guys. It's a perfect spot for your family and your kids. And then you call the lender and you find out, oh my gosh, I'm way, way underqualified for this house. So, getting your hopes up and, shattering your dreams that way is not a good thing.
Yeah, and as also from an agent safety perspective too, I mean, if we don't have that pre-approval or pre-qualification, I'm not taking them out.
Right.
I am not doing my job as an agent unless I have that hot and ready, fresh off the printer inked piece of paper saying, here's what you're qualified to buy. Here's what the houses we can show you are within your budget. And, we've had agents not follow the steps of the sale and do the sales process incorrectly because we haven't had people like Jerry issuing those types of documentation stating that they can do that. So Getting pre-approved is a huge deal, and it's easy through Guaranteed Rate. You can just download your app and put all your information in and it goes straight to you, right?
Yeah, our app was just recently updated and it's revolutionary. We partner with Dr. Deepak Chopra, and he's a wellness doctor because our CEO is on the big mindset of, it's very true, to make big financial decisions like getting a mortgage. It's going to be one of the biggest purchases of your life. You got to be in the right mindset, mind place, and health and everything. So we combine the two. So everything in the app, you can apply for a mortgage, you can get a home equity line of credit, all that financial stuff that you'll need on that end of things. But there's also all kinds of free videos that we have instructors that are world-renowned that are recorded every single day. That are for meditation, yoga, nutrition, and it's all there for you, added value for our clients.
So there's no reason why you can't get pre-approved today. Sign up.
That's right.
So Jerry, what frustrates you as a lender?
Well, just before you came here today, or when you were sitting waiting for me because I was on the phone doing a pre-approval with someone, we get to some questions, like basic questions, like how much do you have in the bank type of questions. And they're like, well, I don't want to give you that information. I'm like, well, I can't figure out, what you have for down payment, what programs would work for you, unless I know what you're working with. And some people are, shy about giving their social security number. I mean, that's something that has to happen. We look at Guaranteed Rate. We do, when we pull your credit, we do start off with a soft pull, which is nice because it doesn't affect your credit score. So we can get an idea, exactly where we get the estimated scores at that point and qualify you off of that, and we don't necessarily have to do a hard pull to have your pre-approval issued.
And this whole process is streamlined. This is from start to finish. It could be very quickly getting the determination of where you're at, how much you qualify for, without there any being drama. Really, I mean, from right out the gate to when you start.
Yeah, exactly. And a big part of it is figuring out the person's income. A lot of that stuff with Guaranteed Rate, though, is automated. Like the pre-approval I just did yesterday, we were just able to click a button and have his income verified through our systems like that. Some companies don't sign up for those services, so we do have to look at pay stubs and W-2s. But, once we have that, everything on your end, we can move as fast as you move, basically. So you get a stat the same day, we'll get your pre-approval letter the same day. If we don't need any of it, we can just all do it, automatically. We'll get your pre-approval letter, within an hour or two.
Nice. So Jerry, I work with a lot of clients who are first-time home buyers, and they might have had some bumpy issues with credit, or they have, issues with possibly producing down payment. There's a lot of assistance out there that not many people know about, and it really doesn't need to be boring or drawn out or extensive with the information. It can actually be simplified. Can you tell us a little bit about that?
Yeah. Well, there is that nomenclature where people think they have to put, 20% down or a large down payment. That's absolutely not true whatsoever. At Guaranteed Rate, we have 8 different down payment assistance programs, and a couple of them go down to a 600 credit score, if you can believe it. You get 5% of the purchase price in assistance, and there's many of them that don't have income limits either. And there's also a lot of them that you don't have to be a first-time home buyer. So even a repeat home buyer could be using down payment assistance to buy their next home. They could even rent out the home that they're leaving and get down payment assistance to buy the next home.
It's crazy.
It's pretty nuts. There is so many different options out there that people just don't realize.
And one thing with my team that I've noticed, I have a bunch of agents who utilize you guys, and, I've always found that given the buyer situation, you always seem to find a way to make it work. And
Right.
that's what my team really just,
Yep.
they need. And so these buyers that come to us and are kind of shaky on that idea, you always find a way, whether it's a co-signer or finding a way for us to get them buyers credits from the sell. I mean, there's a lot of different maneuvers that you guys seem to know how to do that can basically get them done.
Yeah, absolutely. I mean, people are pleasantly surprised. Usually after they talk with me, I present every single option they have available to them at the moment. Then there could be additional options if they work on some things on their credit, or maybe pay down a credit card. Maybe there's a stupid, $300 balance on a credit card that if they pay it down to $50, their score goes up 50 points. There's dumb things like that regarding credit that you can do to really bump up your score to maybe get you into different programs and things like that. But we look at all those things. If someone's below the minimum thresholds for credit score, we just don't, throw them over to a credit repair person. We try to look at it on our end with our experience with me doing this for the past 24 years now. I can see, and we have systems here to see, like, if we pay down this, how high would your credit score get? We have scenarios, they're called what if simulators. So we can look at all that first before we, the worst case scenario, we work with credit repair partners too that can help in the worst case of things. But once you call me, and if you're not in a position to purchase, I'll usually be able to get you in a position to purchase within 6 months to a year, by working with you on your credit. So we just don't, hang up the phone and say goodbye.
Excellent. We're and a lot of lenders are known for that. Unless you're right here, right now client, they drop you like a hot rock. That's good. So one of the things that Jerry and I are really renowned for is utilizing each other's services, in the sense that we're licensed in multiple states. So we have clients that are either selling in one state and buying another. We're both in Arizona and Illinois, Wisconsin. So we utilize these differences between the states with our clients, and there's a little bit of differences. Jerry can tell you a little bit more about those.
Yeah, what's nice, I think we're in all the same states. We're also in Florida and Indiana, right? So, every state's a little bit different. I'll tell you what, though. As a nation, we are short on inventory everywhere. So prices are going to do nothing but go up. It's all about supply and demand. Anyone that says the real housing market is going to crash is off the rocker. It's all supply and demand. So, so you're going to see those prices rise. And the key is to get into a home now, while rates are still, they're not super high. They came down a little bit, but when they're still a little bit elevated from where they were, rather than waiting right now, that is not the right strategy to do. You should get into the house now. You should secure your purchase price now, because you can never renegotiate that later. And then when rates do come down, you can always renegotiate that rate, right? So, but the main differences in the states are going to be, tax costs. Obviously, Arizona is going to be cheaper than Illinois, but the Arizona purchase price is higher, right? So it's kind of all relative. Florida, insurance costs, kind of nutty right now. So you got to be aware of that. If you're going to move to Florida, we got to talk to your insurance agent first and see, you're used to paying maybe $1,200 a year here in Illinois. Florida, you might have to pay $4,500 a year just for the homeowner's insurance, and then maybe you need hurricane insurance on top of that. So there's different cost levels in all different states, and that's why you just need to call your expert realtor or lender, and we can walk you through those differences. So, Greg, I don't know about you, but I kind of get frustrated when a buyer, falls and says they really like a house, but then they're like, oh, I want to sleep on it for a few days. Just if you could just talk to the people about this market and how, that's not necessarily the right thing to do. There's attorney review periods. You can always get out of something. Yeah,
so right now we're kind of faced with an interesting situation. There's not enough supply of homes out on the market because people are either scared or on the fence, or we're kind of a little bit normalized as far as from what we faced back in 2020. People are kind of waiting to see everything unfold. And right now, I can tell you that, like, I just had a buyer in Indiana that we had to do a price escalation clause on her offer. And basically that states that we'll offer you a certain amount of money, but we're willing to go over a certain amount just to win the bid. We have clients that are, continuously fighting for credits. We'll have a buyer come in and ask for a closing cost credit to their closing, plus inspection costs to be paid for, such as, like if you have to replace items within the home. They're asking for home warranties. So right now it's a very fluid purchase kind of market, and we're seeing a lot of different movements happen that a skilled agent should really help people navigate with. But essentially waiting on whatever it is, the sky is falling to buy a house, or whatever they've been led to believe by media or their mom, their family, their dad. It just isn't true. And you need to reach out to a professional to kind of get an accurate piece of information as far as how you should make that determination. And calling either one of us right now is going to essentially provide that. So pick up the phone and call us.
Yeah, yeah, absolutely. And I don't know about you, Greg, but I've been noticing a lot with my pre-approvals that we have two demographics that are fighting for the exact same house. We have our baby boomer generation that is kind of winding down and looking at downsides, like the pre-approval I was just doing that didn't want to give me their social security number or asset information. But then we also have the first-time home buyer looking in by the same price point.
Yeah.
So talk a little bit about what you're seeing there.
Well, first-time home buyers are really fun to deal with because, first of all, they're excited. They have motivation. They don't have that experience. They're really relying on either one of the parties to make sure that this goes through, and the nerves are there. Mm-hmm. So they're essentially looking at, their first townhome or an apartment, or even just, moving the idea from leasing to purchasing something in the long term. And so we're seeing that happen more. We're seeing baby boomers kind of remove their equity out of a situation and reapply to something else. So, for instance, I have a client who sold their home in Arizona and is actually looking to relocate in Florida. Well, they've made a significant amount of equity from that sale in Arizona, and they're applying that. So we're kind of seeing movement, and the movement here is it's just not, it's inconsistent consistency. And so having somebody who's skilled and knows exactly how to navigate those waters and apply the finances to where it's not going to cost you a lot of money, that's detrimental in this scenario. So,
yep. And we do have some pretty unique offerings for the people that are above 62 years of age or older. We have something called a home equity conversion mortgage. We'll probably go into more detail about that in some other videos in the future, but it's a pretty unique tool for people above the years of 62 years of age to be able to retire comfortably and have a lot of extra fluid money left over to enjoy their retirement with their family and stuff. So
absolutely,
some cool stuff we'll talk about probably in future episodes.
People that I've been talking to say, like 6% interest rates, those are extremely high. That's something that's like unfathomable.
Right.
When they're not talking about like all these decades ago when they were like 18% for a house.
Right, right.
So like, what's the difference? What's the math on this adding up?
Yeah, in the I think late 70s, early 80s, they were 21% for a mortgage. And, the average interest rate over the lifespan of people keeping records of mortgages is 7.5%. That's the average interest rate. We just were so, spoiled in a way of seeing rates down in, the threes. There was a couple of refinances that I refinanced people on 30-year fixes at 2.5%. That's really kind of unheard of. Now, rates did get pretty inflated, because of the inflation and everything that we were seeing. They did get up to almost they were approaching almost 8%. They luckily have settled back down here. Now they're in the mid sixes. And we do expect maybe even later this year that we'll see some continued drops as we get better news on inflation. Now, if that news changes on inflation, then the rates could go back up. And it's also an election year, though. So usually in an election year, somehow magically,
things get rose-colored glasses.
Way better somehow.
So like I tell people all the time that they're waiting for that, they always tell me, well, we're waiting for the rates to drop down to the threes again.
Yeah.
Do you think we'll ever see those numbers again for a while, or what's timeline?
We're not going to see threes. That was artificial. That should not have happened. There was a lot of Federal Reserve buying mortgage-backed securities that caused that, and that we're not going to see that happen again. I don't believe here in maybe my lifetime. I mean, that was a rare event. But I think an average rate that we may end up seeing is somewhere in like the 4.5 to 5.5 range. I think we'll probably be there for quite some time. Now, the inventory of homes, that's not going to get fixed at all anytime soon. So those prices are going to continue to rise. So you're better off getting out of renting right now and getting into a home before those, and then you'll be able to enjoy the equity that you'll gain immediately off the bat. I think last year real estate was up 10%.
Something like that, yeah.
There's only 2 times in history that real estate has gone negative, and it was down in the 2008 years. There was 3 years where real estate was negative, and then 2008, 9, and 10, I believe, or
and I feel like everybody's sitting here waiting for that shoe to drop.
Right.
They're sitting here waiting for that 2008 crash that'll never happen.
That only happened because of one problem, and it was bad mortgage practices, which are taken care of now. That's not happening anymore. There's laws in place. There's the Dodd-Frank Act. There's so many laws and new rules that we have to abide by. That's why I need to know all your information because I need to know your income. I need to make sure you can afford this payment and you can get approved for it. It's like there's laws that account for that. So that's not going to happen again. So there's not going to be overextension, over leveraging of the mortgage market. So we're not going to see the real estate prices crash. And at that time when they were crashing, is because people couldn't afford their payment at that time. There was a lot of adjustable rate mortgages. The payments were going up. So there was so much inventory, it was nuts. And that's why the prices went down. Now we have the opposite. And we're going to have the opposite for quite a lot of years just because builders can't build homes fast enough.
Different types of loans. So like there was some news that just came out for multifamily purchases. Those
really
limits kind of went down.
Oh, yeah. Huge changes with that. So now on a conventional loan, usually you had to put 25% down to buy anything from like a 3 to 4 unit home. 3 to 4 unit home is kind of nice. You live in one unit and you get rent from 3 other units. It pretty much pays for your mortgage payment, right? So, and you're gaining the equity in the house. It's an awesome way to live and build wealth and equity, right? Maybe after you do that for a couple of years, then you end up moving out of there, rent out the whole thing, keep it all rented, and then you buy something else, and they're all paying for your mortgage payment on both places.
Sure.
It's really neat. Usually you'd have to put 20 to 25% down in that scenario. Now, what the conventional financing has released for Fannie Mae and Freddie Mac, they're allowing you to do that with as little as 5% down.
It's crazy.
Which is absolutely outstanding.
Yeah. Renovation loans. We have a lot of people that might approach you on a 203B. What does that entail? What should we know about that?
Yeah. I'm just going to correct the letter for you at the end. It's 203K, but that's okay.
Close enough. that's okay. Why he does the numbers that I sell.
That's all right. And that's just one version of a renovation loan. The 203K product is the FHA version of it. We do VA renovation. We do conventional loan renovation called home style. There's all kinds of different renovation products, and we have all of them at guaranteed rate. Honestly, there's not a program that I know out there in the marketplace, and I've been doing this 24 years, or a program at a competitor that we do not offer or have. Being the largest mortgage company in the Midwest here, we definitely have a large, and we also have unique programs that Fannie Mae and Freddie Mac have us test pilot, which is really cool.
Yeah.
That's why we have a lot of these grant programs that are unique. But there is really unique and cool programs to be able to maybe buy a house that's maybe someone didn't finish the kitchen or needs a kitchen remodel, or it's not to your taste, but it's a great area and it's a perfect type of house. Maybe it's a perfect ranch that you want, but it's just really outdated. Don't pass that up. Just call me and say, hey, this place is outdated. What can I look at, for a renovation loan? Because you still can put as little as 3% down on a renovation loan. So what we do is you just take the purchase price, and you're probably getting that at a discounted purchase price because it's an outdated home, right? And then we have you get a bid from a contractor. It has to be a licensed contractor. Obviously, the lender wants to make sure the work's going to get done, and they have references and things like that. We check them out too. But once they give us a bid, we just add those two numbers together, and we say, okay, put 3% down on that number, and then at the closing, we give you the money to do all the renovations, and then you have 6 months to get the renovations done. You're not doing it yourself. Your contractor is, and all the money is there to do it. And it's pretty awesome. And then you end up, converting maybe an older home in a nice, good location, maybe right next to the school, where it's an older neighborhood. But now you updated the inside of the house, and now the value of that home is going to be pretty much probably at the top end of that neighborhood level, right? Because you redid the entire inside of the house, and all these other homes are older. So it's a really good way of being able to build equity quickly and to get into a house that maybe, make it your own, make it so you love it.
Plenty of options. You and I have done several transactions in different states, and all of them have had different time frames. But I know I've been kind of hard on a few of them to where we have no time to work. From the time we've received that contract and it was accepted to the time you've processed the loans and closed it, what was like the fastest we've ever done it? I think it was like under 2 weeks, I think.
It was 2 weeks, and you know what? That was one in Arizona that we did, if I can remember. But, recently Guaranteed Rates come out with a program called Same Day Mortgage. So there's a large number of loans that we do that do qualify for the Same Day Mortgage program. Not all of them, like renovation's not going to be one of them, obviously, or that reverse mortgage isn't going to be one of them. But if you give me a contract and a same-day mortgage that qualifies, which is basically just a conventional loan, it could be 3% down conventional loan, or an FHA loan, 3.5% down. If it's a purchase and we get that contract over from you, Greg, the next day you'll have your loan approval from underwriting.
It's crazy.
That's how crazy it is.
It's crazy.
It's absolutely outstanding. There's no other company that can even match it.
And as a real estate agent, when I present that information over to the selling or buying agent, whichever we're on, I, as a selling agent, I can relay that information to my clients, and that gives them, as far as underwriting goes, a little bit more reassurance that you won't default on this and nobody's going to be taking earnest money.
Absolutely. I mean, I've had, because there's been a lot of multiple offer situations, if you can imagine. I've definitely had buyers win the bid because they had a same-day mortgage pre-approval letter, and they had a power bid pre-approval letter. That means they got pre-underwritten with us fully. And and the seller, obviously was looking at all these different pre-approval letters from all these different places, and they're like, "Well, we decide which one to use." Ours said it wasn't a pre-approval letter. Ours said it was a loan commitment to lend for the people that were offering on the house. And I've had multiple buyers win the bid because of the way that we do things here differently, a guaranteed rate.
Excellent. Love it. So when we, as agents, price a home for sale, we try to do it as aggressively and appropriately to where we're going to get enough people who are qualified to come and view this property, submit us an offer. As a lender, as a buyer's agent, you obviously pre-qualify individuals in even increments. So as a selling agent, I always tell a lot of the agents on my team, we never want to price a home. We always educate the seller that, hey, we can lower the price, but we want to make it so it's in the limits of what you pre-approve somebody.
Right.
Not something where it's like $156,286, right? Because you don't pre-approve people for that. But if you pre-approve it in even increments like $350, $400, those are appropriate things. So as a lender, we always kind of try to, have you give us pre-qualifications with that information on it. And how do you determine that?
Yeah, well, that's tough because every property is different. So every property has different taxes, right? Different areas have different insurance costs. So, I always make myself available up until 10 o'clock at night. I tell people every day, doesn't matter, text me the property address so I can take a look at the taxes and insurance. Even if I pre-approve them for $350, maybe that was with $6,000 a year in taxes. But now you're looking at a house that has $4,000 a year in taxes. They might be able to go up to $425 on the purchase price. And I think it's funny, like you're saying, some realtors that price these homes at these awkward numbers. This is not selling a car. It's not like you're trying to,
Sure.
They should be doing it at even numbers. It's kind of weird out there how they think that's gonna, change the mindset or whatnot.
And we've done that. I've sent you properties on certain buyers where I said, hey, these are our 3 properties. Can you please factor those out? Because you are correct. If one was $350 and the taxes were different, they might be able to qualify for that other house that's at $375 because things are a little bit different on the numbers.
Exactly.
So it's important to actually utilize that for you to give you that information so we know how to better position our clients for offering. Because I know sometimes you've told me I need to come in with a closing cost credit.
Right. So, the way you got to think about closing cost credits as a seller is that you just need to be concerned on what you're going to walk away with in a check on the day of closing, what you're going to net on that home. So say you're selling your house for $240,000, but you have a first-time home buyer that comes in and they need a seller credit of $5,000. And you don't want to take anything less than $240,000. So what the buyer can offer you is they could offer you $245,000 and ask for that $5,000 seller credit from you. That's not coming out of your checking account. That's just all on paper at closing. So at the closing, you're still walking away with that $240,000, but you help that first-time home buyer get into the house because maybe they didn't have the money for the closing costs that they needed. So it's a win-win if we can make it work out. It's all about.
And this is why it's important that you utilize individuals who are experienced. He has the experience for that with the numbers. I have experience with that with the approach. Together with the right team and the right utilization of your people, that's what's going to make you successful in your purchase and ultimately why we're here.
Exactly.